Hello everyone, welcome back to another video. So in this short video, I'm going to break down how you can get access to the volume footprint charts on TradingView and other order flow tools such as volume profile, stuff that the pros use, and how you can start actually reading that data, set up the charts and get it all set up ready for trading. So first things first, you're going to need to use the upgraded version of TradingView. Okay, so if you're on the free plan or the more basic plans, the Essential or Plus, you're not going to have access to the footprint. Okay, it's Premium or Ultimate is what you'll need. And as you can see, if you scroll down, it's called Volume Footprint. Doesn't come in these two plans, but it comes in the Premium plan. You can try it free for 30 days. Great. Monthly cost £68, basically about $100. But once you're upgraded, you're also going to need to actually grab some data, right? So the volume footprint, all the contracts that are traded, all that data comes from one exchange called CME, Chicago Mercantile Exchange, right? So it all goes through their exchange, and you're going to need a subscription from them in order to get all that data. Now, luckily, TradingView's made it really easy. If you scroll to the bottom of this page, you will see CME Group Futures. Go ahead, click on that, and you can go ahead and subscribe. Now that will give you actually access to their data feed, and TradingView does all the technical stuff in the background. Once you've paid for both things, the upgraded TradingView and the CME subscription, you're good to go. Okay, so let's go over to TradingView on the charts and show you how to actually set it up for trading. Okay, so as you can see, we are on TradingView right now. Now, first things first, this will only work obviously on futures, right? So if you're looking to trade, I don't know, some forex pair, you're not going to get that data, right? But this is basically the standard, TradingView candles. We're on the Nasdaq futures, so NQ is the for the Nasdaq, ES is for the S&P 500. If you want to do currencies, 6E is the euro, 6B is the pound, etc. Right? So all those, what do you call it? All the actual ticker symbols, you can Google them and find out what they are. But we're going to do with the NQ here because that's what I personally trade. Now, normal candles. If you now go where you can actually change the different types of chart, if you scroll to the bottom, you will see volume footprint. Now we're going to click on that, and there we are. The volume footprint has loaded. Now it's going to look a bit different on your end because I've already set mine up to how I like it, and I'm going to show you how to set it up to look like this, because your one is going to look a bit different at this point in time. So if you just double click on the actual footprint anywhere within the footprint, you get the whole all the settings. So first things first, really easy stuff. Obviously, the body, borders and wick of the candle, what colors you want them. So again, some people like to use blue and red. I've seen black and white, all different colors. So that's entirely up to you. Select whichever colors you like. Now, row size, you also have auto and manual. Now this is something you're probably going to change every so often as well as you're trading, and I'll come back to that in a minute. Okay. Display, you have cluster or profile. I personally use cluster. And the type, now this is very important, I use the delta. So the delta is the difference between the buyers and sellers. So for example, if I go to just buy and sell and click OK and zoom in to any price level here. So here, for example, you had 5 contracts sold, 4 contracts bought. Right, really simple. So the difference between 5 and 4 is obviously 1. So there was 1 more sell contract than buy contract. So the delta would be -1, right? So if I switch back to delta, you will see it says -1. Really simple, right? And you have other options. You have the total. So the total volume, obviously 4 plus 5 is 9. So it will come up as 9. So that's the total volume traded. And then you also have something called a ladder, which is basically the buy and sell as well, but it just kind of highlights the stronger side in colors. So pretty self-explanatory. Now, everyone likes to use the footprint a bit differently. I personally like the delta, and the reason I like the delta is because it just shows me the difference, and that is kind of what I look out for. Okay. So I use the delta and then apply gradient to background. Now your footprint at the moment will have a different kind of like a gradient color, right? Darker color will be, you know, bigger contracts, more contracts, lighter color will be less. I personally don't like that. It just kind of messes up with my vision a little bit. So I just untick it. But if I tick it, you can see that gradient. You know, some people love to use it, other people don't. Personally, I do not like to use the gradient, so I keep that unticked. Value area, okay, I have it set at 40%. Again, I very rarely use it. I would very happily, you know, leave that unticked, to be honest. But the value area just basically shows, so you see these little dotted lines, that's the value area. That means 40% of all the volume was traded in that little area there. It just shows you where the most volume was traded, and you can set the percentage. Okay, so you can set it to, you know, 20%, 50%, whatever, right? Personally, I rarely ever use it, so I don't even know why I have it ticked. I'm going to actually untick it for this. Point of control is the most heavily traded area within the candle. So if you put that, it turns it black. You can also change the color, and it shows you the most heaviest traded cluster within that candle, right? So 51, you know, sorry, and it does it not by delta, but by total volume. So that's why 3 is highlighted, because here would have been the most volume traded, okay, in that 3. So if we, for example, switch again to buy and sell, you will see where that 3 was. Yes, absolutely right. There was 32 contracts and 29. That has the most volume if you add them two together than, you know, 12 and 41. So that worked absolutely fine. Personally, again, I don't really use the point of control on, at least not on the footprint. And then what's very important, what I do love to use, is if you click show summary info, switch it up to a table, and then you can select what you like. So I personally like to have the delta percent, and the cumulative delta. So that's session CVD, and I'll explain what those are. Obviously you can have total volume, volume change percentage, the buy volume that came in, the buy volume percentage, sell volume, all very self-explanatory. You also have minimum and maximum delta. So say in one candle, the delta went all the way to 500, you know, plus 500, but it, you know, you can see that it closed at only plus 300, for example. You know that there was, you know, a bit of sell pressure coming in as well, the market. So it can be useful to use. Personally, I don't really use it, but definitely worth playing around and kind of seeing if it fits your trading. Obviously, the point of control, high, low range, and open interest. Personally, I just like the delta percent, and the session CVD, the cumulative volume delta. All right, and I'll explain what that all is. Imbalance. Now, a lot of people like to have imbalances, and imbalance is basically, I've got it set at 300%. That's pretty much default for most footprints. An imbalance will show, you know, if there's 300% more buyers than sellers in that area, that will highlight as an imbalance, right? And you can set it to whatever you want. So you can highlight it however you like. Now, if I just make the highlight blue, so you can probably see it, and for negative, I'll make it black. You can see that, and then switch it to buy and sell, sorry. You'll be able to see what it means. So, for example, there were 1 sell contract traded here, 27 buy contracts. Obviously 27 is, you know, 300+% more than 1, so it highlighted it, right? And again, it does it wherever there is, you know, 300% more buyers or sellers in the market, right? Now, personally, again, I don't really like to use the imbalance. A lot of people love to use it. It's absolutely fine, but I personally don't like to use it. You can also hit it so it ignores zeros, because obviously anything bigger than 0 will technically be infinitely bigger, right? And that's pretty much it. You can just leave all this stuff alone. Don't play around with that. And yeah, so now row size. Row size basically is how big do you want each cluster to be. Okay, so I have it set at manual and 16 ticks per row. All right, there's 4 ticks per point. So basically each cluster is 4 points in my the way I have it set up. So this is 4 points, okay? So from each little cluster you see, that is 4 points, okay? Very self-explanatory. And really you want to adjust it depending on how volatile the market is, because sometimes the market, you know, when it's really volatile, you know, that's like here it works fine, right? It makes it nice and easy to see. I can see the numbers, boom, 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 really clear. Because if I have it, let's say at just 1 point, so 4 ticks, you'll see becomes very difficult to kind of look and pick out big clusters of volume, right? Because it's just too much for your eyes to see. Sure, you can see it a little bit here, but for the most part, it becomes very difficult to see. And if I'll switch it back to the delta, yeah, you can. It's hard to kind of, you know, spot the big clusters. But if I switch it to 16, oh, really easy. 104. That's a nice big cluster. I can see the clusters quite easy. 131, 114, etc. Right? So I personally like to kind of adjust it depending on how volatile the market is. Sometimes the market gets a bit slow, and you know each candle isn't that big. I might drop it down to 8, and then it becomes easier to see. So that's something you're probably going to want to change and play around with, you know, as you're trading, right? Depending on how it is. But I'm going to keep it at 16 here. All right, and auto tries to kind of optimize it for the best, but personally I find sometimes it's just easier to do it manually. Now, display, I have it set at cluster. Some people love the profile. Now, all the profile does is kind of, again, shows you like a profile. So the biggest bar is obviously where the most volume was, and the smallest is where the small volume. Some people find it easier just to kind of spot the bigger volume, like here, here, etc. Again, for me, it makes it just, I don't know, my eyes prefer it to have it as clusters. I prefer it like that, but again, entirely up to you guys, right? How you like to use it. I've already explained the delta. Next thing I'm going to explain is the session volume, delta percent, and obviously the delta. So if we look at the bottom, this is where that table info is, right? You have obviously the delta. So that is, you know, the difference between the buyers and sellers for the whole candle, really easy. The delta percent is basically the delta divided by the total volume, right? So that's 20%. So 170 contracts is 20%. 170 buy contracts is 20% of the whole volume traded in that candle. Does that make sense? So if I, for example, switch on in the table, switch on the volume, you can see there was 854 contracts traded. 170 is the delta to the buy side, so additional 170. So if we go to a calculator and do 170 divided by 854 and then make that into a percentage, so times 100, you get 19.9. I don't know if the camera can pick that up, but it's basically 19.9%, basically 20%, right? So really easy to you know, to figure out what it is. Okay. And the reason the delta volume percent can be useful is because it can kind of show you, you know, how aggressive those buyers or those sellers were in that candle, right? Because, you know, if you've got a really high delta percent, it means, you know, the majority of people, like there's a huge imbalance there, right? A lot more people are buying than they are selling. You know, 20% more buying happened in that candle essentially than selling. All right, so just look at it like that, right? You know, here it was a pretty balanced candle. For example, 0.25% more on the sell side, but pretty much in balance. Here, 43% more buying happened in that candle right there. You know, so you can kind of, you know, you can measure it as a form of aggression. And last, we have the session CVD, the cumulative volume delta. Now again, really, really good tool. The reason I have it is more for ranges than anything else. So the session CVD just shows you the delta for the whole session. So for the whole day, from the start to the day to the finish, right? So here, for example, we have it at negative 2090. That means there were 2090 extra sell contracts traded throughout the whole day, right? And the reason I use that is, again, more for kind of consolidation. So if we find, like, when the market just kind of goes sideways, so for example here it kind of went sideways, probably want a bit more consolidation than that. But if we look at the session, if we look at the cumulative delta here, when it started it was negative 2.17, and around here it was negative 2.53. So you can kind of see, you know, who is piling on more contracts. But generally speaking, you know, I use it more for like longer term consolidation. So like maybe this is a good area, right? Because we went sideways quite a bit here, right? So we started at negative 296, and kind of midway we were, you know, positive 1065. So in that area, you know, just in that small area here, right, even though we didn't go up or we didn't go down, right, we just went sideways, a lot more buyers came into the market, but they failed to push the market up, leading you to kind of figure out that probably sellers have more of a better chance at pushing the market down, right, because they're more efficient at pushing the market down or in their direction, right? If an extra 1,000, you know, a lot more, 1,000, because it was negative when it started, you know, if an extra almost 2,000 contracts, right, buy contracts, couldn't push the market up, we're probably going to go down, and you know, the market just sort of plummeted down from there. So I like to use the cumulative delta more for, you know, consolidation. But that's pretty much it, and if you followed all those instructions, you'll have a chart that looks somewhat like mine. And I will go in a separate video on how to actually read it, how to actually start trading it, because obviously, you know, it's a lot more in-depth than just following high volume. If you just chase volume, the biggest mistake people make when they first start trading the footprint is they see high volume, you know, lots of buyers, and they just buy because they think, oh, it's got to go in their direction, right? When really it's a lot more, you know, there's a lot more nuance to it, and I'll explain different strategies on how to kind of read the footprint properly like a pro. So make sure you subscribe to the channel, turn on channel notifications if you want to see those videos. A lot more are coming, and I'll be breaking down a lot of trades and giving a lot of good valuable information in this channel. But apart from that, guys, thank you guys for watching. I hope you enjoyed this little setup on how to get the volume footprint on TradingView, and hopefully I'll see you again very soon. Take care.